Good morning, everyone. Welcome to Banao Bharat's Friday live session. We are just about half an hour into the trade. We saw muted expiry yesterday. You can see here all day Nifty was in a very sideways movement, and today also we have just opened on a flat note. Nifty has opened at around 17,783, has come down to 17,697 and currently trading at 17,728. So this is the chart of Nifty. Currently trading at 720, and this is the chart of Bank Nifty. Opens at around 41,444 and now currently trading at 41,200 levels, trading within the first candle range. So we saw one more day of fall in Adani Group stocks. Let us see how they have opened today. This is a chart of ACC. Yesterday closed at 1861. Today opens lower at 1774 and currently trading towards the day's low of 1774.75. In fact, ACC has actually not cut yesterday's low. Yesterday's low happens to be 1774 and today's low happens to be 1775. So this is though it has opened lower, it has still not cut yesterday's low. Watch out for that level. Currently ACC also is in sideways movement. Adani Enterprises, another day of fall. Yesterday closes at 1578, today opens around 1536 and now 1259, already about 100 points down from the open. This is the third red candle in the day, and this is going much further down, currently trading at 1259. So Adani Enterprises is continuing its fall. ACC is still holding on to the yesterday's lows. Adani Port yesterday closed at 461 and currently today opens at around 470, goes down to 418 immediately in the very first candle and now currently trading at 431, again towards the day's low and below yesterday's close as well as yesterday's lows. Ambuja Cement yesterday closed at around 354 levels, opens around the same levels, makes a high of 357, comes down to 342, though this also trades around day's low of 342. Ambuja has entered into the sideways movement, so if at all there is any buying, it is only about 367. So this is with respect to Ambuja Cement. These are the four stocks that are there in F&O, and we track only the F&O stocks. We do not track the cash based stocks. We have certain criterias on how to select the stocks. We do not select the stocks which are of having lesser volumes or very highly priced or very lowly priced. So we do not do any analysis or checking on the penny stocks or the stocks which are not having any profitability, stocks which do not have long track record, stocks which are not in the mainstream. So these are the stocks which we do not look into. We generally prefer to look into the stocks because we are technical traders. For us, what is more important is consistent price action as well as consistent volumes. Some of these other kind of stocks, what happens is there will be volumes and there will be huge activity only for a short period of time, and after that it just fizzles out, and you do not get that kind of price action or volume movement for many months to come. If the stocks are active probably for 1 month in a year, then we do not get good technical indicators to analyze or the good price levels to analyze for us to decipher what might happen next. So we would prefer the stocks which are actively traded by everyone, which is in everyone's radar. So mainly like stocks like Hindustan Lever, Reliance, SBI, ICICI Bank, HDFC, there are plenty in fact. As a retail investor you can hardly focus on 4 or 5 stocks, so why would you worry about the 5,000 stocks that are there in the Nifty or a National Stock Exchange, or it could be in the Bombay Stock Exchange. So for a retail trader it is important that we just like focus on as a retail traders, it is better we focus our attention and time and money on very few stocks and try to make a kind of a decent returns only on those few stocks, instead of like jumping or picking into some stock based on some tip or some broker's recommendations, because tomorrow when something goes wrong you can't hold anybody liable or responsible for such actions of yours. Instead, learn the technical analysis, learn the mechanics of trading, and just see like be in the frontline stocks which can like give you some decent return in a very short span. It could be intraday, it could be 1 or 2 days or 1 week or 1 month. So for retail traders it is always better to have a short term view on the market than long term. There is a very contrarian view wherein they say like retail investors should always be long term investor. In fact, I wouldn't subscribe to such a view, because like retail investors money is very limited. He keeps 50,000 or 1 lakh or 2 lakhs or 5 lakhs and he puts on something and he just waits for 20 years is not the game to be in. He should see the visibility of returns. That is what is more important. For that he has to be little bit more active and more engaged in the market. They say like retail investors should totally avoid the watching of market and stay away from that. I subscribe to a slightly contrarian view here, and I would say like retail investors, because we do not have backup of anybody, we have to make our own decisions. We need to see the visibility of what is happening. We cannot say like I have put 2 lakhs and I will sleep for 5 years or 10 years. So that is not how a retail investor should think. He should actively engage himself. If he cannot actively engage himself, then there are other mechanisms like he can put into mutual funds or something like that. But if he wants to be a trader or an investor on his own, then definitely he needs to learn the skills and he needs to be actively engaged. If not in terms of positions, he need not churn the positions, he need not churn the portfolio a lot, but still he should know what is happening in what stock, each stock, whether it is in long term uptrend, what is the short term trend, what is the medium term trend, what is the long term trend. So these are the information that you will get as insights from our Trading for Living program. You will start viewing market very differently. You will start viewing the market as a professional, as if you are managing multi-crore fund. Though you are managing a small capital, your thinking will be like a fund manager who is managing a large fund. So only when you are having that kind of a thinking, it is possible for you to make some positive returns from the market. So having said that, let us quickly look into I would say today also we have a kind of very dull and flat opening. Bank Nifty, Bank of Baroda. Here we are with Bank Nifty, 41,311, high of 41,444, low of 41,090. It has held on to the yesterday's lows of 40,000, and day before yesterday's low happens to be the buy level at 39,718. Unlikely that the market will fall so much today, or market will go higher to 42,250. So it is the broad range has happened because of day before yesterday's big fall. Day before yesterday we saw about 2,500 points fall. After that, yesterday one full day there was a kind of sideways movement, and today also it wouldn't be a surprise if market moves or just ends the week on a sideways note itself. And probably over the weekend people will deliberate upon what is happening in the market, what has happened, and then how they have to position themselves in the coming weeks or months ahead. So this is I am thinking today probably there will be a muted day, and it may not have much of things to do. So accordingly, just keep in mind your positions and trade with your stop losses and targets. So if you are liking the content on Banao Bharat, do subscribe to the channel, like the posts and share the posts as much as possible to the fellow traders. Let them also become aware they can learn certain unique skills for trading that are required to be profitable, to become independent traders. Well, have a very nice weekend. Let us all once again see on a Monday morning. Until then, Om Swasti.